to welcome everyone to the regular meeting of actually the first regular meeting of the Board of Selectmen in the summer of 2023.
Okay. I wonder
Here
where
we
you're
go.
going with the first.
June 27th, 2023. So the first item on the agenda is to call the meeting to order. Second is to approve the minutes from the regular meeting held on June 13th.
I'll make a motion to approve the minutes from the regular meeting held on June 13th, 2023.
I'll second that.
All those in favor?
Aye.
Aye.
Okay, next item on the agenda is audience of citizens. We have a few citizens here. Any questions? Hearing none. Any statements? No, hearing none. Okay, next up we have some appointments, which is terrific. We have the Zoning Board of Appeals. Ed Southworth has agreed to serve on the Zoning Board of Appeals with a term to expire of 12/01/2025. That's great.
You
We
want to
need
do one
people
of
on
the,
that.
yeah.
And
What-
I would,
Where do we stand with, I haven't looked
that
at
will,
how many,
that will
will that
give
fill it?
them one over a quorum.
Okay. I didn't look at the,
But I think
Yeah.
it'll all, no offense, but I think it'll bring the average age down to about 60.
yeah. Yep.
We need some folks to get on that board, so. I don't know if you guys want to take them all together, that's
I
fine
don't-
with me, but zoning board of appeals needs to go to town meeting, so maybe.
Maybe we'll do that one
Do that
separate.
separate.
Yeah, or in separate, yeah. We want to do that. I'll make a motion that we appoint Edmund B. Southworth to a regular membership of the Zoning Board of Appeals, term to expire 12/1/2025.
I'll second it.
Okay, now that, if you just add to your motion, that's got to go to a town meeting.
Okay.
We'll schedule that as soon as we can.
Yep, so amended.
Okay. Any more discussion?
No.
All those in favor?
Aye.
Aye.
Okay, next up is, we have a vacancy on the Library Board of Trustees. Sarah Field has volunteered to serve on that. That will serve until the next municipal election, which will be coming up in November.
I'll make a motion for Sarah Field for the Library Board of Trustees, term to expire until the next municipal election on 11/7/23.
I'll second that.
All those in favor?
Aye.
Aye. The next one is, there's a regional housing committee that has been formed by all the members of the COG. We have our own regional housing plan, but, or not regional housing, our own Deep Rivers housing plan, affordable housing plan. The regional housing committee is something that we can try to work, all of the towns can try to have some sort of fluidity between the communities and all of that kind of thing. See if what towns' needs might be different from other towns' needs and that kind of thing. We've asked Daniel Smith, I asked the Planning and Zoning Commission to put someone on because they were very involved in and actually have to enforce and deal with the housing plan and how that affects zoning. So I asked them to put someone on, and I also asked our Deep River Housing Authority to put someone on. While they attended, a couple of people from the Housing Authority attended today's meeting, they weren't sure who was going to volunteer yet. So I'd like to appoint Daniel Smith
In the
now. So we
meantime.
can, yeah.
Okay.
And he's an alternate right now on the Planning and Zoning Commission.
Well, I make a motion that we put Daniel Arthur Smith on the Regional Housing Committee. And there is no expired, it's just a permanent. Okay.
I'll second that.
All those in favor?
Aye.
Thank you. Next item up is the ladder truck repair and possible recommendation to Board of Finance. I didn't make copies of this, I'm sorry. We have a proposal from Fireline. If you remember right, I want to say 6 months ago, maybe 5 months ago, they said that they discovered a leak in the apparatus that lifts the ladder in the ladder truck, and the swivel, I think. It's a hydraulic lift and all of that kind of thing. That has been getting worse, and we have a proposal to repair it. I spoke to the company today because this proposal expired a couple days ago, and they're going to email us if this, the prices are not as volatile as they used to be.
Stabilize a
Really,
little.
like labor stays the same and everything like that. So they think that They think the price is good still.
Okay.
I said, we don't need it just for today, we need it for a couple of weeks from now, because if this moves forward, it's gonna have to go to a town meeting. If it goes in one direction, there's two different directions I wanna talk with you guys about, and then we'll talk to Board of Finance later. It's a $27,000 expense. We're gonna give it a little leeway, so I'm gonna ask that we recommend up to $30,000 to repair that. We're going into the next fiscal year, and this is where the roads diverge. We could, $27,000 is less than we budgeted next year, go ahead.
There it is.
It's less than we budgeted for vehicle maintenance, and things like that for the fire department. But it's more than 50% of their vehicle maintenance line.
Yeah.
They've spent, and we still have a couple of weeks to go, they've spent practically all of their vehicle maintenance line over the course of the year. So I don't expect that if we put a $27,000 hit into that at the beginning of the year, I expect that it's going to be something that gets spent out and we'll have to go to town at some point or another.
Yeah.
So the question really that we put to Board of Finance, and I put to you guys first, is should we send it to town meeting and just pay it, fix it, and leave the vehicle maintenance as we budgeted for? Or pay it out of the line and then address it later?
I think we should pay it, just pay it. It was brought to our attention 5-6
Yep.
months ago.
Yep.
We should have fixed it then.
Yep.
So I would rather go to town meeting, get authorization up to 30,000
Yep.
and fix it.
I agree with
And
that.
I do too. I'm
Yeah.
glad to hear that you guys were all on the same feeling. You know, we could have, should have fixed it at the time. It wasn't really clear. I think we all said at the time,
Yeah, and
let's fix it.
Yeah, and we were kind of waiting for them, and you know,
Yeah.
it was,
Yeah.
yeah. So
So I think the thing to do is to fix it now. It doesn't, I mean, these guys said, you don't have to fix it now. We can just
Yeah.
continue to monitor it, but I want it to be safe, you know?
yeah, you can Band-Aids and I just get it fixed.
Yep, Joyce, you have a question?
I do, what's the current, vehicle maintenance line for this fiscal year that we're ending in a couple of days? What's left, do we know?
4,000.
4,000, okay, I just needed it for
Yeah,
my,
yeah.
okay.
I think we should take it out of capital, you know,
No, exactly, and we'll
Yeah.
talk about that at the Board of Finance more, because
Where it
we're
actually
gonna address
comes from, but.
some of our, we're gonna address some of the end of the year budget stuff, and you'll get a better picture of we have the money to fix it.
Yep.
It's not a big deal. I mean, it's 25,000, it's a big deal, but
Oh, yeah.
it's not gonna hurt anything.
following on what Joyce said, or made a comment, if there's $4,000 left in there, do we know if they're gonna use that in the next couple of weeks?
I don't know if they've used it and we haven't gotten the bill yet.
Okay,
That's a possibility, that's why I was
because
thinking.
I would like to see that 4,000 used first.
Oh, yeah, no, I think.
If it's gonna be left over,
See, the difference there, and Bud can explain this, but I don't think we can do that in a line item that's not a capital line. If it's in there, it'll just go back into the reserve, or surplus, if you will, and then we'll take it from that surplus. So we're using that money. It's just, we can't carry it over, because that's not, I don't think, we might be able to, we've got the accounts here, but I don't think we would be able to do that. I think it'll absorb it back into the line, into the reserve fund, and then we'll take it out of that reserve fund.
The fire marshal did, give us additional expenses, for the life of me, I can't remember what they were for, but they were upwards of a few thousand, so it might be coming out of that.
yeah.
Okay, so what we're gonna do then is, because this has to go to town meeting, ask a recommendation. Either we can recommend now that we bring it to the Board of Finance, we're all in agreement, I don't see any reason not to. Other than if the Board of Finance disagrees. So maybe we'll stay in session, or we'll leave this, table this until
See
later
what
on.
they say.
We'll, what do you call it?
Adjourn.
We want to adjourn, but we will keep them open. We'll take a break.
Put a
Yeah.
pause, put a pause.
Pause on it. There you go. So let's get a motion to table this until the Board of Finance meeting.
Make a motion that we table item 5, ladder truck repair, until after the Board of Finance meeting.
Thanks.
Second.
All those in favor?
Aye.
Aye.
Yeah, I don't think we're gonna need that, but that's
Yeah.
better safe than sorry. Okay, the next item on the agenda is tax refunds from the tax collector. This month we have 2. refunds that total $1,695.56.
I'll make a motion to approve tax refunds and the, two tax refunds, total amount $1,695.56.
Second.
All right, all those in favor?
Aye.
I have nothing else for the agenda. My lovely assistant is telling me to call it quits, so I'll take a motion to adjourn.
Motion to adjourn.
Second.
All those in favor?
Aye.
All right.
Good evening, everyone. This is a call to order of the regular June 2023 Deep River Board of Finance meeting. First item on our agenda will be approval of the minutes of the May 23rd meeting. Would anyone
So moved.
start that? Thank you. And second?
Second.
Thank you. All right. Any discussion? There are a couple items on there that we said we would do, and Angus will bring us up to date when we get there. The next item on which I brought to the front.
You have to,
Vote. We have to vote.
Oh, okay. All those in favor of accepting the minutes, please
Aye.
say aye. Thank you very much. Okay. Now the next item on our agenda will be what do we call it, a presentation or discussion of the audit results for June 2022 from our, what do you folks call yourself? CPA auditing firm, CPAs, advisors now? The whole industry is changing.
Public account.
Public accountants, well, aren't you a big old, and Mike, I see you have your names here, so I'll let you introduce yourselves and get out the way.
All right, well, thank you very much. Again, my name is Mike Van Deventer. I'm a partner at Mahoney Sable, ultimately responsible for overseeing the audit work for the town and issuing the reports on behalf of the firm. Joining me is Lauren Messina. Lauren is a senior manager at the firm, really responsible for the day-to-day execution of our audit procedures. So this evening we have a presentation that we will run through. It'll cover the scope of work, the audit reports that were issued, provide some overall financial highlights. We'll make our required communications, and then certainly happy to answer any questions, really as we go along or at the end of the presentation.
Carol? Carmel?
Again, Mike Van Deventer, I'm a partner from Mahoney Sable, just going through the audit presentation. How are you? In terms of the scope of work on slide 2, so we did do an audit of the town's financial statements. We performed that audit in accordance with both the auditing standards issued by the American Institute of Certified Public Accountants, as well as the government auditing standards issued by the Government Accountability Office. In addition, based on the level of funding that was received and expended by the town, we did also perform a state single audit. In addition, we do also perform agreed upon procedures on the end of school year reports that are filed by the school district with the State of Connecticut Department of Education. In addition to those, what we call assurance services, we also provide some non-audit services, and that consists in assisting in the preparation of the financial statements, the schedule of expenditures of state financial assistance, and the related notes. We also assist in converting the town's governmental fund financial statements to the government-wide financial statements. In order for our firm to be independent and be able to perform both the audit work and these non-audit services, management is required to review the results of those services and accept responsibility for them. Again, Kathy is the accounts manager, and Bob Grissom at Regional School District Number 4 Finance Director ultimately have accepted responsibility for those services. We do issue a number of reports in connection with our audit work. The main report is the report on the financial statements. We did issue unmodified clean opinions on your financial statements. Again, unmodified opinion is expressed when we've concluded that the financial statements are presented fairly in all material respects in accordance with accounting principles generally accepted in the United States of America, and that is as established by the Governmental Accounting Standards Board for the governance. In addition, I'd like to point out that our opinion does provide reasonable assurance that the financial statements are free from a material misstatement, whether due to error or fraud. Okay, so we're not providing absolute assurance. We do not test every transaction. There are estimates included in the financial statements. So there could be a material misstatement to the financial statements. Just based on our procedures, we're providing a very high level assurance that they are free from a material misstatement. In addition to the report on the financial statements, we do also issue a report on compliance and on internal control over financial reporting. In this report, we do not express an opinion on your compliance with laws and regulations or on the effectiveness of your internal controls. Essentially, during the course of performing our audit work, if we identified what we consider to be a material non-compliance with laws and regulations or a material weakness in your internal control structure, we are required to include it in this report.
Could you define internal controls for folks who are not accounting?
Yeah, so internal controls are effectively your controls that you have in place to ensure that the financial statements are being prepared properly in accordance with accounting principles generally accepted. So, an authorization is a control, right? So we do get an understanding of your significant processes, including your payroll and disbursement process. Do you have controls in place to ensure that ultimately the information that gets processed gets captured and reported correctly in your financial statements? Okay. So we do look at the design of your internal controls in terms of designing our audit procedures. So we may identify a risk in your process, so we'll design procedures to kind of address that risk. What we're not necessarily doing is testing the effectiveness and giving an opinion on the effectiveness of your internal controls. Meaning, do all of your, can you place reliance that all of your disbursements have the appropriate authorization in place, right? Again, our procedures are more geared towards the accuracy of the financial statements as opposed to like an internal control audit. Sufficient?
You do test some of those things, don't you?
We do, yeah, but not enough to be able to give an opinion on the effectiveness.
Okay.
Correct. Yep. So during the course of obtaining that understanding, performing those testing, the results of our procedures, we did identify what we consider to be some significant deficiencies in your internal controls over financial reporting. And again, just so everyone understands, there's three levels of findings that we can provide. A material weakness, where we're basically saying you don't have controls in place to prevent a material misstatement of your financial statements. A significant deficiency, which is a deficiency that we believe merits the attention of those charged with governance. So that would be the Board of Finance. We did identify some deficiencies that we're reporting to you, just so that you're aware of those deficiencies. And then there's other matters which we can either verbally communicate to management, but it's not something that rises to the level that the Board of Finance needs to be aware of. So in connection with our audit work, again, we did report significant deficiencies in your internal controls over financial reporting. The first deficiency surrounds your just overall closing process. So again, during our audit, we did identify a number of audit adjustments that were required when preparing your financial statements. So the bar is set for the auditing world that clients will be able to prepare their financial statements with no adjustments as part of the audit process. If we identify adjustments, it would be indicative of a deficiency in your internal controls. If we identify a number, it could be a significant deficiency. If they're significant material to your financial statements, it would be material to this. So the adjustments that we identified was, there were some reconciliation issues between the town's general ledger and the school district's general ledger. We did have to propose some adjustments to balance the interfund activities between funds. We did propose some adjustments to reconcile your tax and sewer assessment receivable balances to supporting reports. And again, we did also propose some adjustments to convert your sewer fund from a budgetary basis of accounting to a modified accrual basis of accounting. Actually to a full accrual basis of accounting, because that's reported as an enterprise fund in your financial statements. So again, our recommendation is that the town really develop some closing procedures and reconciliations over these areas, so that ultimately when we come in to do the audits, we're not identifying and proposing adjustments or assisting in the reconciliations of these certain areas. On the next slide, the second deficiency we did report was over capital assets. And again, during our audit, we did note that the town doesn't have a formalized process for ensuring that all capital asset activity, including additions and disposals, are being captured in accordance with your town's policies. So again, I just give you the example. Right now the town authorizes and appropriates funds for capital purchases. Those capital purchases are recorded as an expenditure in your budgets. From a financial reporting perspective, we need you to identify what those capital asset additions were so that they can be removed from your expenditures, capitalized, and depreciated on a government-wide basis. So again, not something that impacts your budget, but it does impact the overall financial statements.
Give us an example that this board deals with virtually cash comes in, cash goes out, okay? Many of those caches are what an accountant would call capital item. I will define when you have indicated mine has weaknesses. A asset that lives for greater than a year. You'll suggest that we should add more depth to that, but there's plenty of things we buy that have a life greater than a year.
Right, so for financial reporting purposes, you don't want to make it such a low threshold that you're tracking all this stuff that doesn't have an impact on your financial statements. So typically you would look to establish a threshold where you're capturing significant items. So items that would expand more than 1 year, and there was a significant outlay to the town.
Oh, you have a dollar amount that you would put in there as well into my definition?
Yeah, so in general, dollar amounts have been increasing policy-wise. Some municipalities will separate out equipment from infrastructure, and infrastructure will even have a higher threshold. So I can't remember what the town's policy is. Maybe that's what you're looking up. Here, I'm going to say typically I see a $5,000 individual cost of an item for like equipment, and then infrastructure could be anywhere between $50,000 and $100,000 depending on the town. Because again, if you're reclaiming an entire road, that's an asset. If you're throwing down chip seal, probably not something to capitalize more than.
So we don't hit the dollar amount, you would, even though it's capital, you would perceive it to be an expense item.
Correct. Correct. Yep. Yeah. So right now, we're reporting that it's an individual cost of more than $5,000 for equipment, $20,000 for building improvements, and then $100,000 for infrastructure. So your policy is appropriate. So the issue would be identifying the expenses that are incurred and capturing that as part of your closing process to say, here's all our capital expenditures. These are the amounts that meet the threshold. We've assigned a useful life of this, and then we can test that and not necessarily, again, as part of the audit, identify, this looks like a capital item. We don't see it on the capital asset listing, that sort of thing. So. And then the last finding we had was over leases. And this was actually kind of, the town was implementing a new accounting standard this year regarding leases. So part of this adjustment that was identified was really related to the implementation of leases. But essentially during the audit, we did note that the town is a lessor of commercial real estate. In accordance with the terms of the certain leases, the town was owed approximately $53,000 in delinquent lease payments as of June 30, 2022. Again, those delinquent receivables, if you will, were not properly accounted for in the general ledger, so again, they were never tracked in the general ledger. In addition, we're noted that the town did not have a process in place to ensure timely resolution on delinquent accounts. So again, the recommendation there is to identify, inventory, track all your leases, capturing them all on the general ledger, whether or not you've received payment or not, and then to follow up on those delinquent accounts.
And the leases would be in industrial park funds?
Correct.
But still have an obligation to be on the general fund and disperse, or general ledger and disperse.
Correct, because you're only recognizing revenue to the extent you received it. But if you did not receive revenue that you were entitled to, again, you should be identifying that, recording that on your balance sheet, and tracking it.
Consolidated. But we.
General fund balance sheet.
General
Or
fund.
incubator,
Oh.
your incubator funds, because
That's on government wide.
Yeah.
We wouldn't put it in the general fund, would it?
No.
okay.
Well, it would go in your incubator fund and your fund financial statements. Yeah.
Got it.
So ultimately, with any significant deficiency that we report or material weakness, there is a corrective action plan that is required to be completed and filed with the Office of Policy and Management. Again, we did receive the corrective action plan, so that's been filed with the state at this point, but so that is available. I think Amy has a copy of that.
Yep.
Any questions before I move on to the single audit reports? Okay. So in connection with the state single audit, we issued a report on compliance and internal control at the state financial assistance level. So again, in this report, we do actually express an opinion on your compliance with your major state programs. For fiscal year 2022, the total funding received by the town was about $2.1 million. The majority of that is exempt from our testing. The education cost sharing funds were not required to test. So the portion that was not was about $469,000. Your major programs were the Town Aid Road Grant Program and the Local Capital Improvement Program. We did issue unmodified clean opinions on your compliance. So we're saying that you materially complied with those requirements. The primary compliance requirement that we do test is allowable cost. So are you charging appropriate things to those grants? We did, however, report or identify an immaterial instance of non-compliance over the Local Capital Improvement Program. So there is a reporting requirement that is required by that grant to submit an annual form to the Office of Policy and Management. And again, at the time that we performed the audit, it had not been filed for the fiscal year. So again, once we identified it, management did prepare the report and submit it to the Office of Policy and Management. So again, we did report it as an immaterial instance of non-compliance.
So the state requires, if we receive funds, which we do, let me run through some, education, roads, stuff like, education, roads, we get others, but what, of the magnitude 2.1, what does non-exempt? Exempt means you don't have to comply. Non-exempt means you have to comply. What is non-exempt? You had to do special audit, and that's basically the question I want to go to. Is it different questions, things that you need to do for the state than you do for general accounting to meet their obligations?
Yeah, so we have to follow specific standards or requirements when we perform a state single audit. So again, the state will identify, here are our non-exempt programs, so these are the programs that are subject to our testing. And then there's a whole risk assessment process that we have to do to determine what programs we test. And then at the end of the day, we need to get a certain percentage of coverage, which for the state is 50% of their funds.
So of the 2.1, there was already 469 that you had to look at?
Correct. Yeah. Again, the majority of the non-exempt is your education cost sharing funds. All right, any questions on the overall reporting before I move into the financial highlights? Okay. Again, these financial highlights, there's a lot of information in the financial statements. There's a lot of different financial statements on different basis of accounting. I know the board primarily deals with the general fund budgetary financial statements. But again, there's the general fund on a modified accrual basis, GAAP basis. There's the government-wide, which is a full accrual basis. So again, we try to identify some overall highlights for each of those financial statements. Certainly, if we identified anything of concern from a financial perspective, we would include it in these communications. The first slide goes over your budgetary highlights. Again, your original budget for the general fund did not plan for the use of fund balance. During the year, additional appropriations of $153,000 were authorized. So the actual change in fund balance was an increase of $556,000. So that resulted in a favorable budgetary variance of about $709,000. So again, you plan to use 153, you actually increased your fund balance 556, so that the combination of those two is your favorable budgetary variance. Your revenues were about $625,000 more than budgeted. That was really the result of favorable property tax collections, building permits, and conveyance taxes. Your overall expenditures were $877 less than budgeted. And that primarily relates to the variance for the purchase of the fire truck and related equipment that is now being accounted for in your town's capital and non-recurring funds. So although you were under budget in the general fund budget on expenditures, you were also under budget on other financing sources because of the related capital proceeds, including the debt, were also moved and accounted for in your capital and non-recurring fund. Next slide goes over your governmental fund financial highlights. And, again, this includes your general fund on a modified accrual basis of accounting, as well as all of your special revenue and capital funds. Your combined ending fund balances total about $5.3 million, which was an increase of about $1.7 million from the prior year. Of the $5.3 million, your ending fund balance in the general fund was about $3.4 million. Again, that was an increase of about $573,000 from the prior year. Of the $3.4 million, 2.6 was considered unassigned, and that represents about 14% or 1.7 months of your general fund budgetary expenditure appropriations. And again, as we discussed, this is as of June 30th. So if you appropriated money subsequent to in the current fiscal year, that does not get captured as part of your unassigned fund balance. In terms of your capital and non-recurring fund, that had an ending fund balance of about $1.4 million. That was an increase of about $1.1 million from the prior year. Again, that was attributed to the issuance of general obligation bonds in the amount of $1.4 million, offset by expenditures incurred for authorized capital projects. So again, the majority of that represents unspent bond proceeds that are restricted for capital purposes. The ARPA fund, which has an ending fund balance of $452, that just reflects the interest that was earned on the ARPA funds that have been received and not expended. Again, unspent funds are reported as unearned until you incur allowable expenditures. So again, the amount that was unearned or deferred was about $657,000 as of the end of June. The incubator fund had an ending fund balance of $199,000, which was an increase of about $32,000 from the prior year. And then all of your other funds had an ending fund balance of about $249,000, which was an increase of about $37,000 from the prior year. Again, just a thing to point out from a board perspective, you do want to be aware of these other funds because they could often result in a deficit that may need to be funded by your general fund budget. Again, we're not reporting any deficit in any of your other funds, but it is good to be aware of them.
When you use the word fund on page 10, are you talking about cash, or is it got to have accruals in there?
This has accruals. Yeah, so this is on a modified accrual basis. So again, if you go through the financial statements in detail, you have your general fund budgetary statements, and then there's a reconciliation of those statements to the modified accrual basis of accounting. which again, you then have a reconciliation of your modified accrual to the full accrual. So again, a lot of information is required in preparing the financial statements. The last slide goes over your government-wide financials. So again, this captures all of your funds, converts them to a full accrual basis of accounting, and captures all of your capital assets as well as any long-term liabilities. So again, the focus on your government-wide financial statements from a user perspective is typically on your long-term liabilities. We'll kind of give you information about whether or not you have unfunded pension liabilities, a lot of debt. Overall, the town is reporting a positive unrestricted net position of about 1.5 million. Again, we see a lot of municipalities that have significant deficits in their unrestricted net position, really generated by unfunded pension benefits. In terms of the town's net pension liabilities, the NPL for the town plan was about 1.9 million. That plan is 25% funded, and that's utilizing a discount rate of about 5.75%. So again, if you look at the pension plan over the last couple of years, you've had a couple of significant retirements, and you have deployed a lot of the assets within that plan. So again, I would expect, and you're probably seeing this, that your annual required contributions are going to be increasing probably significantly in order to reaccumulate those assets to be able to pay the benefits of the plan. Again, a well-funded plan is typically anything 80% and above. So again, this also includes a lot of market losses that occurred as of June 30, 2022. So hopefully you've gained some of those losses back this year. The net pension liability for the fire plan was about $412,000. Again, that plan is about 57% funded. Again, utilizing a discount rate of 5.75%. And then the town also has employees, actually the Board of Education, that participates in the Connecticut Municipal Employee Retirement System Plan. And so the state provides information that allocates a portion of the liability to the town. That portion was about $50,000. The state's plan is currently 83% funded, and they're utilizing a discount rate of about 7%. The town also reports another post-employment benefit liability. Again, this reflects retiree healthcare benefits for eligible employees of the Board of Education. Again, state law does allow retirees to access the Board of Education's healthcare plan provided to active employees. They do pay between the state and the participant 100% of the premium. What the actuary does is basically quantify the benefit that the employees are receiving as a result of being allowed to stay on the plan, and you recognize that benefit over the period of time that they work. So ultimately, you have a liability that's being recognized of about $154,000.
Which is an odd sort of thing. It's agreed to in the negotiation that retirees can continue to access healthcare. We personally have no obligations to that, other than your profession says it has to be on our balance sheet.
Yep, so there's technically a cost that's associated with that. So the Board of Education is probably paying higher premiums by allowing retirees to stay on the plan for a period of time.
Oh, no kidding.
Yeah.
They're paying,
Yeah,
makes
so
sense.
this tries to quantify basically what's your cost for active employees versus retirees.
I hadn't thought about that, okay.
And so the liability effectively represents, for somebody who retired, now I can draw down on that liability that you've recorded over the next 3 years as I remain on your plan. Again, from a budget perspective, no impact. But from a financial reporting perspective, it captures that benefit.
The same went through as the teacher's pension plan. We do not pay into it. Is there any way that you were required to put, and there's a lot of pages in there. There's no way that will ever come back to us, is there? I mean,
I don't think so.
recognize there's a flaw in
I think
never.
they had
There's no
discussion
way it's
at the
coming
state
back.
level, but
Yeah.
no, I think the municipalities would get together and probably sue the state if they try to push that down on
Billy O'Neill promised.
it. Yep. But they are doing a much better job funding that plan.
It looks like it.
Yeah.
82%, almost 83%.
All right, so the last section goes over our required communications. Again, these communications are required by our auditing standards. We did issue a governance communication letter this year. That was a separate letter that was issued. Really covers these same items that I'll run through in the presentation. The first item talks about our responsibility under our auditing standards. Again, although we do assist in the preparation of the financial statements, they are the responsibility of town management. It's our responsibility to express our opinions on those financial statements. In terms of the plan, scope, and timing of the audit, again, no changes were made to the overall plan scope of the audit. However, there were delays initially in scheduling the audit, and then also delays in the town completing certain reconciliations, as well as the actuarial disclosure reports that did result in multiple extensions being obtained from the Connecticut Office of Policy Management. So just to kind of talk about the timing, so there, in terms of our industry, there are not a lot of firms that do government work. The capacity for auditors in Connecticut to get all of the 169 municipalities done, it's just not there. So we do schedule your audit to start in December. If you were 100% ready for us to do the audit in December, we would still probably have a difficult time getting it out by the end of the year. So, I typically look at, the first extension, potentially the second extension could be attributed just to scheduling delays. However, once we start the audit, ultimately, if there's issues with reconciliations, if there's issues getting disclosure reports, that's when you'll see the third and fourth extensions kind of occur. So, again, we would like to see better closing procedures that when we actually do come out to do the audit, that we can do our procedures and, hopefully get through the audit either with one extension or potentially no extensions. But again, there are some delays in that process.
Your introductory phrase was interesting. We don't have to go into it. You said there's not enough accounting capacity to handle 169 towns that are in the state?
Correct. Yeah. I think this year there was probably more than half of the 169 municipalities were on extension, just from capacity perspective. Again, once you get through January, February, then I think some of those towns have issues with reconciliations, require some additional work from that perspective.
So by the end of the year, it is called, the capacity is there, every town has submitted their audit, and we start the process again?
There's still a number of municipalities that are on extension even now.
Into another year?
Into another year. The state has a requirement now that they put into effect that if you do not file your audit report by June 30 of the following year, you're automatically go to their municipal advisory committee. So again, not something that we want to have to deal with. You'll have to go up to the state and meet with the state regarding what you can do to make the audit go more efficiently.
It was mostly the larger municipalities are.
I would say it's really across the board.
Really?
Yeah.
Deep River was there one time, many years ago.
Many years ago, yeah. Back when the school was over.
Many, many years ago, yeah.
So I should not take, I am stressed that we keep asking for all these extensions, but it seems to me.
Yeah.
No, we've actually-
We're celebrating.
Yeah, that's what I was gonna say. It doesn't necessarily sound like it's the municipality's problem.
It's
No, it was partly our problem. We
Well, I
had a
mean, in
problem
that
with our
situation it
pension.
was.
Yeah.
yeah.
But generally speaking, if there aren't enough
No.
of you to do it, then we
So from a
have to get extensions because of the lack of capability. Yeah, okay.
From a profession perspective, we've actually requested that they make the filing requirement the same as the federal, which is 9 months. However, the state is always, we just approve extensions. So if you need an extension, just request an extension. Again, once you start getting, issues, deficiencies, that's what they're looking at as opposed to the timeliness of the
Okay.
filing.
Interesting, yeah.
In terms of significant audit findings, so again, I do want to point out that the town did implement a new accounting standard on leases. In connection with the implementation of the statement, the town did recognize lease-related assets and deferred inflows of resources. So the implementation of the new standard did result in an increase to your town net position in the amount of $47,000. So if you went through the financial statements, you would see a disclosure on the implementation. Essentially, the standard requires you to look at your lease agreements, quantify them, record an asset, a receivable for the future payments on those leases with a related deferred inflow of resource. So again, no impact on your revenues and expenditures, but it captures those leases on your balance sheet. So again, I think the point was for municipalities or governments in general to do a better job tracking their long-term commitments.
And Angus, we lease everything out there at the industrial park, or we do it, some of it, I assume that's where the leases are, right?
Yes.
Do we continue to lease, or we've been selling some off, or?
No, we're continuing to lease. There is one property that we're either going to sell or lease, but that is up in the air still.
And they're not at market lease, they were at these favorable leases.
Oh, they're very favorable leases, very, very favorable.
Yeah.
In terms of significant estimates and judgments, again, I mentioned earlier that the financial statements do include estimates. Estimates consist of estimated useful lives that are assigned to capital assets, discount rates that are utilized to determine your net pension and OPEB liabilities. You also have an estimate for landfill closure and post-closure care. Ultimately, we did deem those estimates to be reasonable and also consistent with what other municipalities utilize. Your discount rates of 5.75% on your pension plans are on the lower side from what we see. But again, that hopefully will increase the funding to your overall plan.
That's the intent of it.
Yeah. Happy to report that there were no significant difficulties encountered in performing the audit. Ultimately, everything we requested was provided to us. We had no uncorrected misstatements, so if we identified an adjustment as part of our audit procedures, it has been recorded and reflected in the financial statements. We had no disagreements with management. We did obtain a management representation letter. There was no unusual representations that were requested by us. Again, I just give the board the example that if we were unable to substantiate a transaction and we were relying on the representation of Angus, we would inform you of what that representation was. And we are not aware of any consultations with any other independent accountants. And then, as I had mentioned before, in terms of reporting different levels of deficiencies, there's also recommendations that we may have that we don't necessarily consider to be a deficiency. The recommendations that we had related to procurement, again, with a lot of the federal money flowing into the governments, you are required to follow the procurement requirements of the uniform guidance. Our recommendation is to review your policy, compare them to the uniform guidance, and actually document and summarize those differences so that when you do procure using federal awards, you're complying with the uniform guidance.
With the receipt of ARPA,
Correct.
will there be an incremental reporting obligation or auditing obligation?
Depending on how much you spend in any given fiscal year.
So it's spending.
Yep, so the threshold is
Okay.
750,000 total federal spending. So if you spend over 750 in federal, that will trigger that compliance.
And you're defining spending as we wrote checks for that, or we have committed funds to various activities?
You have, in between. So you,
Who could ask for more?
you've incurred the expense of the liability. So commitment isn't necessarily an expense until the actual services have been performed or the goods have been received. So at that point, even though you may not have cut a check yet, if you've incurred it, if you've incurred the expenditure, that's what we look at.
So if the town has approved a dollar amount over the threshold, you will do an audit?
Correct.
Yeah, and that will happen this year because of the ARPA.
More than likely, yes.
Yeah.
Yep.
Say more about evaluation of current accounting systems. All accounting systems get old, they all get old. Why are you recommending that ours, and what are you recommending? Do we get a new one, or
So
there's better accounting systems out there?
There are better accounting systems out there. I think your accounting system is definitely old. A lot of the newer accounting systems include controls actually designed into the system themselves. So they definitely can make things more efficient. It can also probably improve the reporting that may be given to the board in terms of the actual reports that are provided. So again, I can't remember, is their system currently service? Yeah,
What is the service?
they're still servicing it?
Yeah,
Yeah.
yeah, I think you're
You
gonna
still have a
reach out
service
to see
contract
if, there was an upgrade.
Yes, there is an upgrade available. We're gonna talk to you. You
Okay.
guys have already recommended a couple.
Yeah,
And we looked into BMSI, and they do have an upgrade, so we want to talk with you about whether that's worthwhile, or should we go with the, with one of the others?
okay,
Just look at your recommendation.
okay. Yeah, I'm not familiar with what the upgrade.
Yeah, that's why, I just found out that they did have
Okay.
that, so we'll send that information to you. and
Okay.
work with that.
All right.
All good. Anyone in Board of Finance questions?
There's a lot of information, certainly if you have questions at a later date, if you would just funnel them through Brad as the chair, and then we would be happy to respond to this.
Thank you. And there is the potential you're going to, I know you worked with Angus about coming back to help us some of the, what is the word we use, deficiencies or material deficiencies.
Yeah, I was gonna comment on that.
Oh, are you
know,
good? Yes.
The corrective action plan does have in place some work with Mahoney Sable to try and reconcile some of these deficiencies, as well as some of these other things. But the plan itself, we've got a good plan for to respond to all of these things, and I'm certain that this will be all taken care of shortly. I certainly will work towards that. But the other thing to look at is those were accounting practices. I think our budget is in good shape. I think, we've got a good reserve fund. We've got a good percentage of all of that. So these deficiencies didn't generally affect our budget as much as our processes. So,
Yeah, I think the general fund is in very good shape. I'm personally, so I'm putting the word very in there. The other big one is the enterprise fund, which is all the pollution control authority. They seem to have substantial dollars in reserve, although they're going to begin to draw on. The others are rather small accounts that shouldn't, there's positive balance in most of them, right?
Correct. Yep.
And then there's always part of that, this mysterious cafeteria fund. Some years we give them money and some years they give it back, so, yes.
Yeah, you will notice that with the government funding associated with COVID, a lot of those cafeteria funds are now cash flow positive. So again, that's not something that's going to be sustained in the future, but
yeah.
yeah.
Rats.
Yeah, right.
Very good point, so, cool. Okay. All right, Tony, no questions, we appreciate your time, and,
Yeah, thank you.
See us again. yeah, we certainly do appreciate all your work, that you do, and that you continue to do it.
Thank you.
And does anyone ever share with Mr. Mahoney or Sable, they should have a space between their names? I think it's two individuals, right?
Well, yeah, it's Mahoney and Sable.
Okay, one time was there an ampersand in there?
It's Mahoney Space Sable and Company.
Oh, I thought that was, they shoved them together.
Part of our marketing, that's our logo.
Ah, they put them together. What will they think of next? Thank you.
Thank you.
Thank you.
Thanks very much, you guys.
I think it would be, they have to do something, right?
No, I agree, you gotta have your marketing people. I like ampersands, I've always liked ampersands, you don't use them enough. All right,
Thank you.
folks, next item on our agenda is comments from our citizens. Do citizens have any comments? Although these are, in addition to being citizens, they are town favorites. With that, Tommy, it is time to talk with you.
I'm just gonna
pass out the deposit report. I think Kathy, did she send that out to everybody?
Yes.
There probably is one correction that I have to go over. Okay, just a few things that have happened in the last month. Jackie, you'd be happy.
I don't see Essex.
We'll get to that. Just under the general fund account, the balances, if we went from last month to this month, we're down about $1,163,911. That's taking with that general fund total and minusing out the capital improvements borrow, and then comparing that to last month. Just a couple of things. Actually, Liberty Bank has actually gone up another 50 basis points on interest rates. I did do a consolidation. I closed out the business money market account that had $89,448.96. Consolidated that with the municipal sweep money market account. Both were now paying 3.5% interest. So we went from 3% last month up to 3.5% this month. On the capital improvements borrow, that's by law, we cannot exceed 3% interest on that. I did have to call Melissa Hurd and let her know that because they were giving us 3.5%. I said, no, we can't. Unfortunately, we can't accept that. But she said, boy, that's a good one. So she was backing that off down to the 3%, which is our limit. On the ARPA funds, I closed out the account with Essex Savings Bank. We had $949,646.35. Transferred that into a new account with Liberty Bank, which again they're paying 3.5%. So we go from 0.07 to 3.50.
Nice.
And let's see. On the capital non-recurring fund, because that balance is so low, generally they said under $500,000 they would reduce rates, but they only reduced it to, well, we actually went up from 3% to 3.4%, but not 3.5%. You'll notice the Town Hall Auditorium Restoration Fund, pretty much phasing that out. There's only $149.60 left in that account. And they did note that on the bottom of the Small Cities Loan Business Program, on one of the incubator rental income accounts, the first one there with Liberty, has $104,051.72. That is now what they consider a dormant account because there's been no activity within the last year. So normally what I'll have to do is they'll have to come up with a form that I sign so we can defer that. It won't be a dormant account, or all I have to do is make like $1, which I will do. I will just make $1 deposit, and that will take care of that. Also, if you're looking at, we will be looking at these, of course, the revenue side of things. And everything's been.
I'm sorry, I didn't mean to interrupt, but can I just ask why they're dormant? If it's income, rental income, don't you get something every month?
These have actually been nothing. There's been no activity whatsoever on those accounts. So I'm not.
So where's the rental income going for those accounts?
That's a good question. I guess you know where that.
Yeah, that's a good question. The 500 building is one, we're getting paid $1 a year on those because we sold those buildings.
There's your dollar.
It should be, no, it should be in there. Those are, I'll look into that. I don't know why those are dormant. Those are not the leases that we were talking about with the auditor.
Okay.
So,
Yeah, there's been no activity on these for some time. And let's see. Oh, again, on the revenue side, if we're looking at short-term investments, let's see. We had actually budgeted $9,000 this year. Actually, year to date, or for the prior year, we had collected $10,689.58. This year, we budgeted $9,000. We've collected $98,366.87. So we're actually ahead this year by $89,366.87. So that's something good. Wire transfers, I did 3 wire transfers between 5/22 and 6/26 from the last report to this report. Actually, in the last report, I did include, there was a $500,000 wire transfer that was done on May 22nd, so that I did not include that in this report. So there were three wires, one on June 1st for $300,000, one on June 13th for $600,000, one on June 23rd for $350,000. So for those 3 wire transfers, there were $1,250,000. Went from the Liberty Bank business money market account to the Citizens Bank general fund account, pretty much to cover accounts payables. If you look at the total account balances on the bottom, where we have $7,317,413.50. If we take out the capital improvements borrow, we take out the ARP funds, we come out a more realistic figure. So that would be actually for this month of $5,327,478 compared to last month of $6,350,977. So there's this year is an amount of $1,023,498 less this month than last month. The education ECS monies, it's funny, I looked on again this report that all of those monies should be dispersed as far as I know, but there is a balance remaining here of $394. If you remember, we make 3 allocations during the year of the monies that we do receive. So for this fiscal year, we received $1,671,457. The 3 allocations, so one quarter of that is received on October 31st, 1 quarter on January 31st, and 1/2 in April 30th. So for the next fiscal year, we'll be receiving our first installment in October. On debt service, there'll be 2 payments that are being made this month. One on June 23rd, that's for the Kirtland River Street Sewer Project expansion. Principal and interest payment of $23,099 is due. That was actually opened 6/23/2017 for $605,000 at 2.225 fixed interest rate for 40 years. So we've made 7 payments, and there's 33 payments that remain. And the other payment that we've been making this month is that payment was made on June 23rd. So that the new balance on that account is $544,781.62. And the sewer construction bonds, USDA, this was for the project loan, which was for $3,375,000 that originated on October 30th, 2006. We make a monthly payment on that, and that doesn't mature until April 30th of 2026. So we've got $558,658 remaining on that bond. But there is a payment of $16,914.76 that is due on June 30th, and that is due every month. And then we will be on 7/29. We have the boiler payment that's due with the Deep River Elementary School with Dime Bank. That will be the last payment. It was a 7-year bond issue, and we will be making our last final payment of $28,574. And the only other 2 debts that we have are we have the capital improvements borrow, which the next payment will be due August 15th. And then we have the Kirtland River Street Sewer Project expansion, which the payment will be due on December 17th. So those are the 5 debts that we have. And again, we'll be getting rid of one of those in the next month. Basically, that's all I have.
I mean, the minutes of the last month say you dangled a 5% interest rate in front of us if you joined the state. Did you inquire further?
Well, I have thought about that, but I'm pretty happy with 3.5%. But because that rate will continue to be that for some time, the stiff account that rate does fluctuate. I will look into that further, but I probably wouldn't send more than $1 million or $1.5 million to that account. But I do want to get kind of a background history on that if I can.
These dormant accounts for rental income, is there any reason they have to be in separate accounts? Because they're collecting no interest. I was just thinking, is there any reason if they're dead that they could go into the municipal sweep money market or some other place?
I'm not really sure about
Yeah,
that.
I've already made a note. We're gonna look into that and see.
It'd be nice to be getting
because those
3.5%
accounts-
on
Yeah, I
$100,000 too.
don't know, those were created a long time ago, and I wasn't involved in that.
There might be
I
a
don't know.
requirement that we can't, because
I
we've
kind of-
never
that's what I think.
we've never received interest on any of those accounts.
Right,
There might be a
because those
stipulation
were-
that we can't. Something we'll have to look into.
Because those were based on grant monies is what
Yes,
I think
right.
that's based on.
That's right.
But it just sits there. We don't use it, we don't spend it, it just.
No, we do use it. We use that for maintenance on buildings and things.
Oh, okay, all right.
That's why I'm.
Just not in the past year.
No, we haven't had to do anything in the past year on either of these.
Thanks.
I will address to the ECS, the discrepancy in the ECS money, Tom, is a result of the state not having their budget completed when we had to get ours approved.
Oh, okay.
So at the end, when they
Yeah.
did approve their budget, it was a different number from what the governor's number was.
Oh, I see, okay. I was just looking.
That's always the gamble with these.
Yeah, I was
guys.
just looking at the revenues, and that
Yeah.
just kind of stuck out.
Yep.
Thank you.
And you said, this is your time.
Do you have to open up the?
Yeah, me too.
This is your time to share thoughts that you have, recommendations that you have.
Recommendations from the selectmen. First of all, let's call our budget or our town board of selectmen's meeting back into session. We actually, in our effort to finish our meeting, adjourned, but that was not our intent. So we're gonna call ourselves back into session and make a recommendation to you as a group. And that has to do with the repair of the fire truck. Remember, we spoke about this a few months ago. The ladder truck, right.
Insurance or something?
Yep, exactly, the swivel on that. That's not that. As part of that, we received a proposal or an estimate on the cost to repair that. That cost is upward of $28,000. What we talked about is two different ways that we could have that work done. Our consensus, we didn't vote on it because we wanted to send them both to you, and this is this needs to go to town meeting if we go one of the different roads. There's two ways we can go with this. This is going to be done in the next fiscal year, so we could just say, take it out of the new budget that will begin to take effect on July 1, where there's a $45,000 vehicle maintenance budget line item. We could take that money out of that, but that will deplete that by more than half. And if you look at our expenditures, the fire department has utilized virtually all of the $45,000 that was budgeted for vehicle maintenance. So we know if we do that, we're going to have to come right back to the town to fill that with different monies. The other way is to just go to the town now and say we need to appropriate up to $30,000 to repair the ladder truck to make sure that everyone remains safe and it's usable when it's needed. The Board of Selectmen, in our conversation, all agreed pretty vehemently that was the way to go. That we should appropriate the money go to town meeting, have the town agree to appropriate the money, and have this repair done.
Next year's budget or this year's budget?
Be in next year's budget. We don't have time to, we don't have time to do it out of this year's budget. We have to go to the town to do that,
And the budget's done.
and the budget's done,
Yeah.
so. Our recommendation, I mean, we'll vote on it, but based on the conversation that we all have here, our recommendation is to go to the town, appropriate up to $30,000 and have the repair done.
And not affect the budget.
Not affect the budget
The
line.
45,000 budget that's in there for next year.
You have a clock running on this bid though, don't you? Which
Well, no,
seems to be like money to
I
rest.
spoke with the company today.
Oh, you did?
And they're going to send us, either they're going to say this estimate will hold, or they're going to adjust it accordingly. But in the course of the conversation, he made it clear that, costs are not as volatile as they were. That, the labor cost is going to stay the same, it's not gonna change. He doesn't anticipate, they're not changing, estimates every 30 days anymore.
One way or the other, you have to go to the town to appropriate the money. So why not just spend the
No.
45
Well,
and then go to the town when they've depleted that 45, if they do? Because they may not next year, they've got a whole lot of new equipment coming in.
That's one way of looking at it.
well, my thinking on that is that this is just cleaner. It's an expense that is not part of their regular, when they prepared that $45,000 budget, that was in anticipation of what they were going to spend. In fact, if you remember, we pulled it back from what they asked for because they expected costs to go up and they expected all of that. But because of those new vehicles, we pulled that back from, I think, 55 to 45.
That was the basis of my question. If we wanted to get started immediately, spend the 45. But you're going to go to the town and say, I need more money. Why do you need more money? Okay,
I think one of the
So it's
conditions.
the same story when you get there.
Right.
I think one of the conditions might be if that repair was imminent and it needed to be done now, then the money is there in the budget, they can go and do it right now,
Yeah.
because it's in the budget, but it's not an imminent thing. It doesn't have to be done, it has to be done, but it doesn't have to be done immediately. Thus, hit it now and then not let it impact the rest of their budget.
Can that money come from our ARPA funds at all?
No, I don't quite agree. We can use that truck, it's a hydraulic system and it is leaking. Is it out of service? No. But I don't know that I would ask anyone to go up in that ladder with a system that is leaking and could fail. I think it should be done at this point immediately. When we were told about this, the fire department was like, well, we could put it off, I don't feel that that's the case. We need to repair it now. The question is, which road do we go down? I think, and the Board of Selectmen have said that we should not impact the 2023 budget line and go through into our reserves to take this.
You're going to a town meeting, you've got several things you're going to a town.
We have to go to a town meeting anyway, so it's not gonna be just for this. And actually, this is a little bit out of order from how I wanted to talk about it, but we were gonna talk a little bit about our balance and the work that Bud and I have been doing on what we anticipate for surplus from this year. And ultimately, I have a pretty big comfort level that we have funds and we'll still be able to increase our reserve in percentage and increase our spending and still be without having any impact on our budget. So, or actually only in having a positive impact on our budget. So it sounded pretty convoluted, but really it's an easy decision. I think we either go into their existing vehicle maintenance budget, which the Board of Selectmen does not agree on, or we go to town meeting, which is what the Board of Selectmen is recommending. So it's up for you guys to discuss.
Board of Finance, any thoughts?
Not yet.
going for town meeting for the, up to 30 seems cleaner to me.
Yeah, that's what we
But,
think.
folks,
I think it's reasonably foreseeable it could fail too, and if it failed, and there was liability there, that wouldn't be good.
how often do they think they use it? I mean, it gets into this whole question, how often do they go out and put out fires or put out, go up on, but,
Well-
by the way, drainage should have nothing to do with it, we have to fix it. I'm just,
They train pretty regular with it.
they
do.
train regularly with it? Okay. All right,
Yeah.
Does it need a motion?
we do.
We're gonna make a motion to make that recommendation, but I wanted to get I felt we should get a feel from you guys before we made a motion, to move forward. If you disagree vehemently, then we would probably make it.
I think it's clean, just doing, you have a total clear rationale for why you want to do it. You set it out in front of the town, it's a
Yeah.
safety issue, another, right?
That's exactly
What's
what we,
the,
yeah.
I don't see what the,
I mean, in retrospect, during our conversation, we were like, well, we probably could have and should have done this as soon as they said it was happening.
yeah.
But it wasn't presented as a real safety issue then.
Yeah.
It seems to be becoming that now, so,
Yeah, I mean, everybody here is on notice about it.
Yeah.
Right?
yeah.
So if something does happen, that's not good.
No, exactly.
So it should be.
Exactly, yeah, that's precisely it. So, we'll take a motion to send it to town meeting, to recommend to the Board of Finance up to $30,000 expenditure.
I'll make a motion to move to the Board of Finance, $30,000 to fix the aerial truck.
Up to.
Second that motion.
All those in favor?
Aye.
Are you gonna adjourn?
Board of Finance, we received a recommendation from the Board of Selectmen to,
Right out of the horse's mouth.
to go to a town meeting seeking up to $30,000 to repair the ladder fire.
Town truck.
Town truck, okay.
I'll make a motion that we go to a town meeting and request up to $30,000 to repair the aerial ladder fire truck.
I have a first, I have a second.
Second.
Anyone have any discussion?
Where is that money coming out of? What fund?
General funds,
Where?
general fund. And we take all of our extra funds, so yeah. Well, we haven't discussed either board. Fire department, you've got $45,000 in your budget, sorry I had to spend 20, 30 of it for your truck, but live by your budget. Much rather draconian purpose, I mean, that's not the way we do things, but it is one of the alternatives. Live with your budget, find a way to live with your budget. That's not the way we have treated those folks, but it is something we have not commented on.
Your vehicle maintenance budget will stay at 45,000 and we'll get 30,000 from our general fund instead.
Well, that number will become 40 plus 30, we will have the authority from the town to increase that budget. We need to remember, next year, when we put our budget together, that is not a reoccurring.
It's not a typical maintenance
Right.
issue for their vehicles, I don't think, right? It's
It's
kind
above
of
and
a
beyond.
one-off, it's a one-off, yeah.
Arguably, it gets into the conversation we had on capital, should it go to capital? It lives long enough, it didn't hit this, what was your threshold? Okay, no, stays at expense. Fine. All right, all those in favor of sending to town a request for $30,000 to repair the tower truck, let's say aye.
Aye.
Thank you. Done. All right, Angus, you still have the floor?
All right, thanks. Well, the other thing that I was going to talk about first was what you and I have been working on. And my I don't know if it's a recommendation or just, but it is a recommendation. So we've got, looking at things, I mean, we don't have it final numbers yet, but we can, I think Bud and I have been doing an awful lot of work, and Bud, you can jump in on this as far as the numbers go. But we're looking at, based on increased revenues well above what we budgeted for. We budgeted conservatively, not being able to anticipate the interest rates were going to go where they're going to go. And Tom's got us almost $100,000 in additional revenues just on short-term interest rates. I had I could never have anticipated we were going to make almost $100,000 on building permits over what we already budgeted. So there's $200,000 of surplus. We have, I think our tax collector has brought us up almost maybe a little more than $200,000 of additional revenues over and above through tax sales and other, and unanticipated, uncollectible collections. So we're looking at least a $400,000 budget surplus from this year, and I think we probably will come up with a little bit more. Now, those numbers are estimates still, but I'm very confident that that's a minimal of where we're going to be. Given that, my recommendations really are that we add money to our reserve fund, which is where it's going to go, and that'll bring us up to a percentage that's where we are probably now, probably 12, 13, 14%. With that, you know, that's higher than our own benchmark of where we want to be. If you remember right, we talked about, in the beginning of the budget season, we talked about putting some additional funds into road maintenance. I'd like to ask, and we're not quite ready to ask yet, but I'd like to suggest you all think about putting another $100,000 into our road paving program, so that we can, pave more roads, get our roads in better shape. And combine that with, and we don't have full numbers yet, but we anticipate, and this is a good one, this is better than the other one, that we anticipate an unanticipated expense from the Board of Education, that we are legally obligated to satisfy that expense. So that's going to be another hit on that. So that's at the elementary school, and I fully expect that if we follow that road, we're going to end up at about a 12%, 11 or 12% surplus percentage, and that is our benchmark. So we can absorb these expenses as well as build our reserve fund up, and I think that's positive on both ends. So it's not really a recommendation yet, but it is where I'm thinking. And
Should you put anything in the pension?
Yeah, I was
It's
gonna
only
say that.
5%?
you know, that's an interesting question, and I thought about that when he was talking about that. But we are working with our pension people, and if you remember right, when we were preparing the budget, we talked about putting more in, and we were advised that we could in fact put less in, and we all agreed that that was the wrong way to go. We are on a very aggressive plan to get that built back up again. I'm not sure yet we need to. We have the reserve fund if we need it for something, but I don't think right yet is the time to put that into the pension. That's my own feeling. I mean, I'll leave that up to everyone, and we can address this with our
One of the
pension
things that Angus
people.
and I promised to do, address that pension fund during the summer, so.
Yeah.
Yes, and it's Angus, the board made commitments over the years that we would meet the higher standard,
Yeah.
but then we had several people who retired and took a
And
lump sum.
Well, that's really, you can't say that enough as far as that goes. We were well funded until we had two major retirements that really whacked the pension.
But that could happen again, correct?
It could, but
So-
we've got the reserves. Why put it in now?
Okay.
We've got the reserves. Let's let our plan play out. We are funding it as aggressively as we can in a budget process. When we have the surplus, it might be a place to put it, but I think we are making better interest on it. We can do better things with it, and still know that we have it. That's one of the advantages of having a reserve fund that is properly funded.
We put 180 in last year, and I think about the same this year,
Oh,
so it's
yeah.
not like we're
No,
ignoring it.
we're not ignoring it at all. We're doing exactly what we're doing. Actually, we are more aggressive than we were advised to be this year, and I don't think that's bad. I think that's good. We need to get up to 80%.
We're light on the firemen's too, right?
Firemen is I think it's almost 60%, 58%.
57.
Not as bad.
57%.
Like, yeah.
Yeah. But that, if you look at that, we had a major increase this year. That went from, I want to suggest that went from 50 to 90 or something like that. Yeah.
Correct. And some of it is situation, what I'm about to say shouldn't be discounted. Stock market is down, therefore the
Oh, yeah.
obligations.
Oh, yeah.
Right.
Yeah, Mike alluded to that too, yeah.
Yeah.
So, all or if it's the number assumptions, but nevertheless,
Mhm.
it's a good question. And we should-
No, it was a good question, and I thought about that when he was talking about it.
I had not. All right.
So those are things to think about. We also, just to make you aware, we evaluated the insurance on our fire vehicles. And that was, it was noticed a couple of months ago, and I've been working with the fire commission to look at how we insure our vehicles, whether it's in replacement cost or actual cash value. Or no, purchase price or cash value. So we looked at it, and some of our vehicles were still being, our older vehicles, our 1989s, our 1984s, were still insured at cost of purchase at the time, which is, you know, it's absolutely absurd. So we've adjusted that, and it turned out to be about a $3,000 increase in the cost of insurance. Or liability.
More than that, wow.
You would think so, but it wasn't as bad a hit as we thought. So we have approved that. It shouldn't be anything that we really even notice. It's not that big of a deal. But I wanted to make you guys aware of it.
I thought we were honorable people. We could have people take a midnight ride in one of those trucks and solve
Well,
any of our problems.
We asked if we could save a little bit more if we made sure that no teenagers were driving.
So, excellent. In last month, you were going to send to meetings, public meetings, see if I can catch up last month. What were you gonna send? You're gonna send a couple things last month to town meetings.
Yeah, we did send them, and
We
we
did
were all,
send them
they were all
already?
approved, yeah.
Oh, I didn't attend, I apologize. All right. And Cumberland's Farms is, that obligation is
That's all
behind us?
done, yeah.
Yeah, excellent. Cool. All right, folks, and to Angus's point, I mean, I like the idea of putting money back. We had to cut it. Wait, how many years ago did we cut that? I remember it was your idea to cut it.
4 or 5 years ago.
Yeah, exactly. And to keep the budget as low as possible. There are certainly plenty of people who point out to me their streets could be addressed.
Yeah, no, we are budgeted, our budget now is what it has been consistently, except for that drop. We're back to where we were. But, I thought, before we got the school information from the schools, I thought that we were in good enough shape where we could add to that this year and not feel it. That didn't work out because of the other pressures that were put on us. But with this, with these revenues, I think it is a good opportunity for us to add to it. But I think we are.
150 is about a number that we
Yeah.
could talk about.
Yeah.
You will know more because you are meeting with people who know things, right?
Yes, no,
Okay.
it's, you know, I'm not sure, I'd like to, that's something, if we're gonna do that, we'd have to do that at town meeting.
Yes.
So,
And it does not have to be done, does it need to be done in July or August, or do you?
well, if we wanna get on their schedule, we should do it sooner rather than later. So the question will be, if we do it in July, then we can go to town meeting in August.
July or
You guys
August?
don't meet, but we can be in August, but I can, you know, we can see. We could do it now if you want, but we don't really have those numbers yet, so I'm not sure if we want to. I would leave that to you.
Board of Finance, I mean, what Angus is asking you is to trust the numbers that he and I are coming up with. They aren't there yet, the budget was
Right.
not closed.
That's right,
These are guesses,
yeah.
to begin to spend some of what we think with high confidence, but we're asking to spend money that we're not sure we have.
Yeah, I'm not really comfortable with that. And the other thought is, you know what, even if we get it approved and we get it scheduled and we run out of time, we don't run out of time for the fiscal year. That will be good in the spring. So I think it's something we can delay if we can get it done this
That's
year.
interesting, so we could wait for auditors to
Yeah.
be in.
I mean, we just did that with Jones Lane. We did not have time to get that finished last year. So they just paved it now on last year's budget.
Okay.
So I think we're fine to wait until July and see if we're more comfortable then.
Well, I've been uncomfortable with it for his last year's budget. We just set the audit of last year's budget. You made it.
That expense was in there.
I was in there.
No, not last year's budget, this year.
There you go.
You know,
This
We have 3 more days.
The present, the budget, we have 3 more days on.
There you go, much happier. Much happier. Excellent.
The pre-July budget.
Yes.
Yeah.
We're
exactly.
looking to the future, that's great.
22, 23.
All right, folks, it is time to look at the financials. Does anyone wish, let's look at expenses first.
You guys want to?
Does anyone have any specific areas to focus on? How about if we, again, this is, I think this goes through the 25th and went through Friday. So we can begin to think that some of these extra dollars will be available. And again, when Angus and I looked at it, we were very, very concerned, okay? And let's take an example of concern. Everybody's going to get paid, so we will assume no dollars are left unless they're specific. For instance, Angus had an assistant, Jonathan, who's more into retirement than active, so we have monies left in that item. The account manager has left. The assistant to the account manager has left. There's $4,000 left. So those dollars we have made the assumption some portion of it will be available. But if you look to the bottom line, the selectmen, $38,000, there will be, I think, a surplus in the selectmen. And that will be a theme as you look through everything else. Probably every item is going to have a surplus. And if I put you back to when we took this budget to the town, we actually thought we would draw on our surplus by about $600,000. I think we're going to have more of a surplus this year. I hope I didn't use the word surplus too many times, but we got it. Legal fees have gone over, engineering fees have gone over. We've been talking about that unless anyone has questions or Angus wants to say the same thing again. So I believe selectmen budget will be, there will be some surplus there. Elections, there will be, well, it says $4,000. I believe all of that will be available, and while it is not relevant, I do get concerned that our electors or people responsible for running elections are not being trained, but that is not for me to say.
Don't they have to be trained with the Secretary of State's office?
Yes, they do.
Yes, they do. Which is, and we have sadly had adventures with people who, where their running of elections have been challenged, so yes, they do. But, so I think we're gonna have a surplus, and I also am concerned that we're not spending money. Let's just look. Town hall operations, note that we've spent, what, 94? I think that's it, isn't it, for oil, Angus? Do you think there'll be more in there in the remaining 2 days? Do you have things outstanding?
There will be, remember this was, yeah, there will be, but
For the
it
next
won't
2
be,
days,
won't be a
next
lot.
3 days, really?
No, but this,
When was this printed? When was
this, we've got bills that
So have
from
come
this
in,
week,
yeah.
so, there will be, but it won't be much. I mean, that's not gonna hit 10, I don't
All
think.
right. And with that in mind, my theme is that I believe even with the, you're going to have some dollars left over in that account. Not a lot, but you'll have some dollars left over. See,
What about the water? Yeah.
water, right? You still got water outstanding, Angus? You probably have water.
Oh, yeah, no, we're
outstanding.
watering fields now, we're using up water. Electricity is the one that really surprised me. I didn't expect that we would have that much left. And town building repairs, we are that's going to go over.
That's going to go over?
Yeah, that's gonna be over by about $600,
Okay.
because we've got to repair the roof at the firehouse, and that's under contract, they just haven't gotten to it yet.
It's good. I like, I don't, not good that we go over, but like to spend all the money.
Yeah,
Just do it
no, that's right.
Let's see who I've left. Selectmen. Town clerk is virtually right on with a little bit of positive. Tax collector has an assistant she hired for the summer last year, so that 2,000 will probably be left over. I'm always intrigued by this one. We mail out. Have we mailed them yet? I should know. We've mailed out all the tax bills. People will begin to get them first week of July. But we pay for that mailing in this year, just the way it's always been. I do believe we'll see a little bit of savings in tax collector. Which, again, what Angus and I assumed is nothing, except the $2,000. Special services, my computer's just jumping all over the place here. Special services.
I think the computer support fee, there will be There'll be more bills on that.
I would think so, but again, there's $21,000. I do believe we'll see some of that.
We've actually seen some, but I think that's probably gonna be half anyway.
I mean, 10's not a bad number to
Yeah.
be surplus, okay. We have paid all of our bills. Building inspector is over, and will continue to go over, but his argument is, and it's a logical argument, the more time he works, the more people are putting additions on their house,
Yeah.
they take out permits and pay taxes, so he thinks of himself as a revenue generator. And
Well, he does think of that.
And why not?
What you skipped over was, planning and zoning.
Oh, thank you. My
And that-
computer keeps jumping,
You know, that's going to be, there will be some substantial, unspent money there because they
They didn't spend any of
did
their
not spend any of
engineering,
their
did they?
engineering, really at all.
I wrote a note to their, remember they asked for $8,000 to do that software? I wrote a note to them, during the budget, you said we could have more revenue, what's the status? And I haven't heard anything back
No,
from them, but how much are you actually netting do we get?
Yep.
Building professional, inland wetlands, although he's put in some time, he always gets close. He never spends money on that technical services.
No, that's
so
why we took them out. yeah.
there'll be a few dollars there. Insurance, I don't know about the 30. Are you paying for insurance and bonds out of your fire trucks coming out of that one? There's $13,000 left there.
Yeah, part of that'll come, but no, what we just increased with the fire trucks, no, but there will be
Yeah.
monies out of that.
All right, that's okay. Employee benefits I'm intrigued with that almost $32,000 of health insurance. That sort of comes down, I don't know, it gets smaller during the summer when we finish the audit. But if you remember, we had an assumption that 1 or 2 employees were going to retire and we would be paying them accrued sick days and have allocation, but they have chosen to go part-time and eat away at that. So that $6,000, $6,400, $6,500 will be available to us. So I'm intrigued by FICA. That's a lot.
Yeah, I don't understand that.
13%. That's an assumption that we make, but, I guess I just leave you while I do believe there will be a small surplus there too. Police protection, Angus should take over. There is a substantial amount of part-time officers still
Yeah.
left over.
Yep.
And we always have becoming about 10% less on a resident trooper, but I think
Yeah,
that's.
no, I'm disappointed, we're struggling to fill the hours for part-time police. I don't have a good reason for that other than we're struggling to get them to fill the hours. I wouldn't think that, I would hope that we don't have that same struggle as time goes by.
And their maintenance, we've been tracking their maintenance, police maintenance continues to have gone over, but same with supplies. But
Well, I think the new car will make a big difference on that. The car that we just got,
Sure.
that will make a big difference on that.
should. Fire department, I'm going to just say it's a mystery. If you look at, they've got $29,000 left over. They have always spent their money. So I do not know, but there's money left over.
You know, remember, we're gonna see bills coming in for the next,
They begin to concentrate on these things around here, so that makes sense. Okay. But a fire marshal, I'm a bit confused, but fire marshal told me, remember, he asked for an increase in his deputy, which I
Yep.
didn't want to give him because he doesn't spend any money on his deputy. He told me the deputy they put in over $2,000 in this budget. I do not see it, so I'm going to suggest they break even. He's going to use his. Let's see, what's my next one here? Again, I'm flipping here. For the finance, we've paid our monies, that's at $1,000. Probably not. We still have our secretary to pay a little bit of, so that we will have pennies left over, but we will not overspend.
your computer's bouncing around, I think we're down to highway.
Yeah.
Assessor, we look at assessor tax, look, I think whether that was happening.
You went too far.
There's 67,000 left over in highway maintenance. There's no way you can spend in the next 3 days to
Oh,
pave a road?
we already did, that's what I was talking about,
Okay.
that Jones.
Oh, all right.
We just haven't gotten that bill yet, it's been spent.
Yeah, highway.
Yeah, that, the general road highway is gonna be, we are very close to spent. Equipment maintenance, we are actually saying, we're not gonna spend all of that. Salary, I think we're gonna be very close to spent. Contingency and storms.
We should have a little left over
That
there.
there, we didn't spend a lot on that. Sand and salt, we saved a lot of money this year. And we were lucky this year. Because we,
How about your equipment maintenance, you're gonna spend that, 21,000?
no, like I said, no, we're not gonna spend that. We're working right now on the, over the rail mower, but that's not gonna be, it's not gonna be that.
Okay. I'm moving this thinking that we're gonna break even in salaries, but there will be a few dollars there, just my team, there'll be a few dollars left over. Public utilities, which is intriguing, they give us the numbers and say, this is what we're going to charge you. And you can see, we got close to $10,000 left, so we shall see. Waste removal, were substantial amount of potential savings there.
Yeah,
You, we budgeted for 2 folks, and you did not always have 2 folks up there, did you?
no, we've had 2 folks up there.
Up there.
We
Now, did you have it all for the year?
We budgeted for 2 full-time and 1 part-time, we haven't been able to keep.
Oh, okay, I
part-time.
knew that you did not have as many as you wanted, all right.
Angus, you said we are getting new police cars?
Got
No, I said we got a new police car.
Is that what this line item is down here? Police vehicles, $65,000?
In capital, yes,
In capital, yes,
yes, that's
And
right.
that was one car?
Yes.
yeah.
And you are right to remember, we had a long conversation about whether ARC should be paying for another one, but we did not move forward on that. Police protection, let's see, highway we're good, again, I keep jumping. Waste, I think there's probably some there. Park and Rec, always a mystery. I see, they are spending money for self-funding, but when we get to revenue, you will see that they're about $40,000 short on their revenues, right? It's a mystery. So, all right. Elementary school. They have $315, almost $316,000 unspent.
When we continue to get bills from them into the summer, I think we're gonna end up with about 130 left over from that. Which is what we put into our budget.
They told us that they would not bill us the credit from the prior year, which is about 190, right?
Yep,
So that still leaves about 100 and something. And you have raised the issue as has been raised to you, but they're, no, that wouldn't be in this
it
year's
won't come
budget.
in this year's budget.
So I guess I'm going to hint that there's a potential we will see. Now, the regional school will not give it back to us. Elementary school is funded out of the general fund. So if they underspend, we get to keep those dollars.
Yes, and the same thing with the regional school. Their budget, they're not going to bill us for the additional, any surplus.
Correct.
So we're gonna see, I think we're gonna see 300,000 anyway from these 2 schools.
And capital, capital's a little tricky. While we may in past talked about we didn't spend it, therefore it goes into surplus. Now we've got the new capital and reoccurring account that it will go across. So it will not be available to meet non-capital expenses. And that would talk about the refunding, the reval, 35 goes over there. LoSiP, we never did the 30,000 LoSiP, right?
No, we haven't spent that yet.
We haven't asked for it yet.
We had that approved at town meeting.
Yep.
And I'm actually meeting with the contractor out there tomorrow.
Was that for this one, this 30,000, that's your sidewalk?
No, every year we have 30,000 in our budget, that's what we're going to
Yes.
spend. Sometimes we spend it, sometimes we don't. Right now, we've got, I think we've got $78,000 or $79,000 in the bank on LoSiP. So we just got approved at town meeting a couple weeks ago to spend up to 25.
That's for your sidewalks, right?
No, that's for the
Oh, that's right.
irrigation.
Sidewalks are too big to go.
The sidewalks, we're waiting to get a proposal on before we go put that expenditure in front of the town.
And the steep grant, we've agreed to put 100, town agreed to put 100, and we've spent 7,000 so far.
Yep.
92 left, which goes over to capital and non-recurring. Right? The library's asked us to take the $10,000 for windows and take it over to non-capital recurring. Architectural engineer, we budgeted 20, we have not incurred any, but it goes over to capital recurring. And I'm still intrigued, new road at the transfer station, which you decided not to do, but that goes over as well.
Well, that'll go over as well, because that'll be part of the capping process.
Okay. All right.
So that road's not going to be fixed or put in?
Until it's capped.
Yeah, that was a new road to
Right.
make it more circular, to get around, to better control the traffic. It will get put in, but not until, hopefully not until this summer or when we start capping, because we got to bring a lot of material into the project.
What does
No.
capping mean?
The landfill needs to, for environmentally, we need to put a layer of impervious soil, or not quite impervious, but close to impervious, around the whole thing, so that water doesn't leach through it into the groundwater.
What will it look like? I mean, just a big green, what?
In the beginning, it will look like a great big pile of dirt, and then grass will grow on it, and maybe we'll put solar panels on it, maybe we'll do other things with it. The old Saybrook landfill that they capped many, many years ago,
Is that the one over by the water?
it's over by the water, it's one of the most spectacular sights
Yeah,
in
yeah,
places.
part of my, it was once
In Connecticut.
down, yeah.
Yeah,
Or when you go up to the airport, is that what Hartford has?
yeah, exactly.
Yeah.
Trash mountain.
Trash mountain. Well, isn't much of Manhattan made out of trash mountain? That is exactly so, yeah. I'm going to go, we'll take a few minutes to go over the revenue and just reinforce what Angus is saying there. Oh, by the way, the costs we are looking at here are not, these are most current. Angus and I looked at a version earlier in the month. Revenues continue to come in. Okay?
When we looked at it, Tom had gotten us $70,000 in short-term investments, and that's up to $89,000.
That's correct. I noticed that what Tommy said, yeah. For instance, if you remember, when we prepare a budget, we assume that we will send bills out to everyone that only 98% of people will pay in this year to give us money to meet our obligations. As you can see here, she has collected in excess of that 98% assumption. It still intrigues me when we give credits to the Evelyn Fire Department in July of every year, why we don't have it in our budget, but to be determined. Property taxes in arrear. We said we would collect 120 for those who didn't pay us in the current year. We've collected 277. A lot of it is probably due to those houses that we sold at auction,
Yeah.
but nevertheless, that's a substantial amount of dollars. And those folks who did not pay when it was due have to pay interest at 18%.
You know, the interesting thing about that, but just for everybody's knowledge, we never actually sold any houses. We put them up. They were contracted to be sold, but they had 4 months to
Yeah, they
pay
were to
the
reclaim,
taxes
sure.
in rear, and all of them.
Everybody came out, it
Everybody
wasn't
came out.
everybody.
Oh, they did?
came up with it.
Oh, wow.
So so we raised money without
Yeah, that
having to
was
put
fun
people out of
money.
the houses.
That is a good story.
Yeah.
Wow.
And then, when you do that, you have to pay us what you owe us, you have to pay the attorney who
Oh, yeah.
auctioned it off, you have to pay the people who put up money, you gotta pay them their money back, and you gotta pay them interest.
Yeah.
It's too bad you couldn't have gotten to that earlier. So anyhow, we have generated substantial, as Angus said, substantial amount of revenues in from the accruals. And it's also true motor vehicle supplement, we assumed 120, we got 143. Here you go. Building permits, we budgeted 50 and we've gotten so far 142, $92,000. I'm just taking a moment to point out the excess revenues, the high revenues that I believe that we're going to see about 70-80% of the surplus that we're generating is coming from the revenues that we, I believe, correctly budgeted. We were just fortunate to be in the what else should we point out? Short-term interest, there is, look at time, it's up 98. We've got almost $90,000 in excess of what the budget said we were going to get. And then there's little things here and there. Grants to municipal projects, that's that 104 that we get at the end of the year. They actually gave us 192.
No, that's a mistake. I don't know why she's got 192 there.
Certainly you and I did not assume those
No.
numbers. I assumed that was just coming in, so.
That's not correct.
I don't have a good conclusion here, folks, other than I believe expenditures are being expended. There'll be some left over. And I believe revenues are running strong, and that should give you confidence that we have a surplus. That's what you think about whether we should start thinking about spending it before it is actually confirmed that we have it.
Dwayne likes to gamble on stuff. I'm gonna make a guesstimate. I'm gonna guesstimate that if you take out the capital expenditures,
Yes.
that we're gonna have a surplus of about 120,000, 130,000.
Take out capital expenditures?
Take out all of the capitals that we're carrying over. No, the unexpended, not the surplus, I'm sorry, the unexpended. Unexpended money is gonna be about 120, I think,
From expenses?
from expenses.
Yes, that's about my number.
I think, that's what I
And you
think.
add that to $200,000-300,000 of revenues?
And I look at that, and I don't know, maybe I'm not looking at it correctly, but I look at 120,000 out of a $21 million budget. It's pretty darn close.
Less than-
It's right where we're
It's
supposed to
like
be.
less than 1%, that is
But
correct.
the revenues is really what's driving this surplus, and we're lucky, and let's take advantage of it.
Take advantage, yeah.
We'll talk about that next month, something to think about. You will see on the agenda that Angus and I would like you to, now we're going to qualify, think about appointing the auditors to do the audit review. While we discussed in April reappointing them, we never as a board took a vote to reappoint them. And the reason I'm picking all these hesitations, they have never given us a proposal of what they're going to charge. It does not seem that we should make a recommendation to them
Yeah, no, not, yeah.
until we have an idea what the dollar amount is. So we'll do that in July. And there's also,
Doesn't sound like-
that phrase, there's not enough auditors to go.
I was just gonna say, it doesn't sound like there's
Sober.
a real market-rich environment for us to go out and shop. You know?
And haven't you had them for a jillion years? Here?
Wouldn't quite go out to the zillion, but we've had them for 4 or 5
They're
years.
reliable, they do.
They've been extremely reliable,
Yeah.
yes, more than an adequate job. And they're very pleasant people, correct, so. Very pleasant. Although it certainly is a normal way of doing business to periodically have different auditors look at you, but if we can't find anybody to look at it,
Well, I'm gonna suggest we send out an RFP next year and see what we get. You know, it'll have been 6 years, and that's, I think, appropriate time to at least
I
explore.
meant to ask Chester and Essex or about their finance folks, what they do, but yeah, who they use.
Essex uses Mahoney Sable.
Essex, yeah.
Essex, the
Essex.
town uses money, I didn't realize that.
Yes,
Yeah.
and I only know that because Don Bauer can't be on the Board of Finance because his company does the audit for Essex.
I didn't realize they did that. Okay, cool. I know they do the school as well, so cool. All right, folks.
So motion to adjourn?
Motion to adjourn.
Second.
Second. All those in favor, please say aye.
Aye.
Aye.